Okay, guys, listen, welcome to the show. Today is Thursday, the 27th of September, 2018, and I'm really glad to have you guys here. Now, listen, got to get to the point. The United States is not where I think the center of the worst part of the crisis is going to be when the crisis actually hits. I think Europe, the European Union, is going to take the worst of it. Thank God, Great Britain, the people in Great Britain have had enough sense to cut free from that stupid mess of a government that they hodgepodged together called the European Union. It was never thought out properly to begin with. It's a disaster waiting to happen. And I'm going to read a little piece here. Let's start the charts right here. I'm just going to read a little piece. Let's see. Right here it says, every crisis in the West for the last 50 years has been ultimately solved by intervention by governments. Right? But he says there has been a huge sea of change that has taken place in the European Union. The individual governments can no longer issue debt in their own currency. Okay? And thanks to Brussels' monetary straitjacket, the ability of those countries as sovereign to rescue their financial system in the next crisis is greatly diminished or not even there. So in other words, they're like countries like Italy, Spain, Portugal. They're not going to, when the next crisis comes, they're not going to be able to rescue themselves. It's going to be a tremendous disaster. This is what's coming. And I believe this is what's coming this year with the deflationary crisis that's going to occur. This is why the Fed is going to be, and the other central banks are going to be forced to react to this. It's going to be, and because the crisis is going to be so great that if they don't react, millions of people could starve to death. Quite literally, if they don't react. And that responsibility will be on their head, and they will be held accountable if that happens. They're not going to let that happen. They're going to react. But it's going to take a tremendously powerful reaction. And the only thing that they can do is make lots of money and throw money at the problem. And that's what they're going to do. That's what they're going to do. Because right now they're tightening. They shouldn't be tightening. Their tightening is what's going to set this off. This bomb off. Now, these guys, you know, like right here, he says, Ken Griffiths says the next financial crisis will hit in 12 to 24 months. I don't think we got 12 months. I really don't. But I've heard them forecasting, oh, it's going to hit in 2024, you know, or 2025. And then all of a sudden, a month later, they're saying, oh, it's going to hit in 2022. And then a month later, they're saying, oh, it's going to hit in 2020. You know? I mean, they keep moving the date closer and closer. Now they got it down to like 12 months from now. Why? Why 12 months from now? Why is the world going to hold together for the next 12 months when everything's coming apart at the seams? That's like a guy that's on board a ship that's sinking, and he say, oh, it'll sink a year from now. 5 minutes later, he says, well, no, maybe it'll sink 6 months from now. Well, he should be saying it's going to sink in the next few hours. This is my point. Okay, let's move on and let's take a look at cryptocurrency today. Cryptocurrency, $6,500. And what do you notice here on this chart? I'll tell you what I notice. I notice that the volumes are decreasing, and it's coming down tighter and tighter and tighter and tighter. It's almost like a countdown here on cryptocurrencies. Look, the highs are getting less high and the lows are getting less low, and it's coming down, and it's like a wave pattern. It's coming down to a smaller and smaller and smaller wave. It's like a flattening out storm, you know, on the ocean. You know, if you had a big storm and you got a lot of waves around, and if you get a calm day and the waves, the sea starts to settle down, that's what cryptocurrency is doing. It's getting ready for something big. Cryptocurrency market capitalizations here. $217 billion, 51.9% Bitcoin dominance. Let me see here. Bitcoin Cash is shooting to the moon. Moonshot, up 24% today. Ain't that something? Dow Jones Industrial Average. She's up 106 points today. Shouldn't be happening, but it is. You know, what can I say? You know, it's making new highs. It's really incredible. The crude oil today is she's settling in over $70 for sweet light crude, which is really quite high because I think they want to keep it between 65 and 70, OPEC. So it's on the high side right now of its price range. Silver today took an awful beating this morning earlier. Now it's trying to recover a little bit, but it's still down 5 cents on the day. It's awfully cheap right now, silver. This isn't. I'm going to tell you, everything else over the past few years has doubled in price. And if they haven't doubled the price, what they've done is they've shrunk it back smaller. So like if you're buying a cake, you know, you go to the grocery store, the old cake used to weigh maybe 2 pounds. Now the cake only weighs a pound. Same price. But, or it might even be actually a little bit higher in price. This is what they're doing to us. Everything's going up like that except for silver. Now you got to understand that back a couple years ago, back when you used to buy the cake and the cake was cheaper, the silver price was double, triple what it is now. You know? Well, double anyway. Double the price it is right now. And the cake was half the price it is right now. So that means that you could buy 4 times more cake with silver than you can now. That means that the price is 25% of what it was in the purchasing power. The silver is 25% of the purchasing power it had. That's a 75% drop in the purchasing power of silver. Now, I know the price hasn't dropped 75%. The price has dropped by like 50%, but the purchasing power of it, in compared to purchasing things. But the dollar's diminished even worse. It's not even worse than the silver. The silver over the years has held up your purchasing power better than the dollar, and everything's been depreciating. We're already in a sort of an inflationary environment that's, when it gets really bad, the poop's going to hit the fan, so to say. Now let's move on to bonds and rates today. We see the bond yields, they fell a little bit, and they're only up marginally today. They're only up a little bit. We're looking at less than on the 10-year, less than 1 basis point. 4/10, I guess, of what? No, 6 just jumped to 6/10 of a basis point. So they're on their way up anyway, except for the short end of the yield curve. But all the long bonds are on the way up. You know, 30 years on its way up, or 30 years up 1 basis point today, which is not too bad. Now we got to watch this 10-year. I'm going to highlight it for you right here. The 10-year. We got to watch it. When that gets up to 3.25%, that's when I'm predicting the crash is coming. And this year, I'm predicting it's going to make 3.25% this year. And once it crosses that boundary, then we're ready. Then we're locked and loaded. Then it can happen at any time. You know, it's kind of like if you had a rocket on the launch pad and you had 5, 4, 3, 2, 1, and they get to that point, then it's ready to go. It's ready to go. U.S. dollar index today, 94.66, and it's been drifting upwards very slowly today. Nothing big, but it's up almost a 0.5% up, 0.39% up today on the day. So listen, this has been your market report for today. You guys, the weekend's coming up. Let's see. I think getting ready for the weekend. You guys, this is getting toward the end of summer now. We're starting to get the fall weather. Thank you guys for listening to my show. You guys have a great day, and we'll catch you again on the next market report. Bye-bye, guys. See you later.